Welcome to Pressure Points. I'm Gene Munster from Deepwater Asset Management. Our topic tonight is Amazon earnings, and no surprises here on the Pressure Point, which is AWS. And before we jump into results, I want to take a step back and frame in why AWS is so important to Amazon stock. It's just under 20% of total revenue, but it's more than all of their operating income, and it's growing faster than the rest of the business. And that means that investors see this as an increasingly important part of the business, and that's been the AWS importance for the last few years. But over the last year, it's become increasingly important because of AI, and specifically is the AI opportunity over the next couple of years. One of the first areas that it's going to land is related to increased spending in cloud. As companies move these models into the cloud, train them, and get inferences from them. The hyperscales, that being AWS with about a third of the market share, Microsoft Azure with 20%, and Google Cloud with about 10%, are positioned to grow well. And the setup going into earnings tonight was there was a bracing. AWS growth has been slowing, and specifically going from about mid 20% a year and a half ago to expectations of 12% growth in the September quarter. Compare that to Azure and Google Cloud, which are growing kind of in the mid 20%. So AWS has been losing share. What investors were looking for going into tonight is to see that share loss may not be as extreme as what it's been more recently. And drum roll for the results is AWS, in fact, missed the street expectations for September, growing at 12%. The expectation was for 13% growth, but again, that outlines how they've been losing share. Shares of Amazon, based on that, were basically down 1% on that news until the earnings call, when Jassy, CEO Jassy, talked about that the deal pace within AWS has quickened more recently. And specifically is that in the month of September, they signed a handful of deals that in aggregate more than equaled all of the new bookings that they had in the first 2 months of the quarter. And as you quickly play that forward to the December quarter, because they did not recognize that revenue, importantly, that revenue was not recognized in September, it will be recognized in December. That probably means that the street is going to have to upwardly revise their AWS growth estimates for December. It was at 14%, maybe it goes to 15 or 16%. So as you think this through, it's 12% growth in September to call it 15, 16% growth in December. That's moving in the right direction. It's still losing share to Azure and Google Cloud, but moving more in the right direction than what initially looked like when the numbers came out. And not surprising, once that happened, shares rebounded, and as of this recording, they're now up 5%. So we saw a 6% move in shares based on that. A reason why Jassy is talking about the success that they're having very recently with AWS relative to AI is he said that because they have such large market share, all of the data, or a lot of data, is on AWS. And what he's seen is companies are moving their AI models to AWS and then they train them there, which makes sense. You don't want to go and pull out all of your data and move it somewhere else. And that seems to be having a benefit to the company more recently. So the pressure point looked like it was in a bad spot. After hearing a little bit more commentary, it looks like it's in a better spot, but still losing share. And the expectations for investors through 2025 is that it's still going to be losing share. Analysts currently have 18% growth for AWS in calendar 25, and Azure and Google Cloud will probably be going in the mid 20% in that year. And so moving in the right direction, but still they have to solve the growth challenge related to AWS. And so it is a separate piece to this important pressure point is I think the reaction to Amazon stock is evidence that the year of efficiencies and margin improvement is largely a thing of the past for investors, and they're all focused on growth. The great upside we saw in Amazon's earnings, the raised margin expectations for December, that doesn't matter when it compares to commentary regarding AWS. So That is the tail that wags the dog, and that is a wrap for this episode of Pressure Points. On behalf of Deepwater, I'm Gene. Bye for now.